You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, a program here on the old Options Insider Radio Network where we break down the week that was, and indeed in many ways still is, from a volatility trading and analysis and research and trends and all sorts of other perspectives here. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network. Got a lot of programs on the old network, including many that delve into different aspects of volatility. Obviously, this is the main volatility outlet. So if you want to mainline all things volatility, this is the show you should be checking out. Hopefully you can join us every Friday, noon Central, 1 p.m. Eastern, to do just that via Mixlr. If you can't, we like you after the fact, too. We know most of you come that way, but we like to give the hardest of the hardcore out there a little bit of a flavor. Behind the scenes, they get to see how the sausage is made. They can also ask questions, give us a hard time, give us their comments, all that fun stuff you can do via the live room. Keep an eye for that link out. We tweet it out before every show, or just bookmark it when you see it once, and you'll see it. Or you can follow us in Mixlr. That's probably the easiest way, and then you get notified the instant we go live all week long. We don't just do this show live, of course. We do a bunch of other ones throughout the week as well. So you can tune in live and enjoy how the sausage is made live. If you got an extra dose of Vol Views this week, this is actually our third show of this week. Russell's voice is going to be worn out by the end of the week. We actually did two. It was so exciting on election night. We did two shows. You can check those out, of course, if you haven't already, via the Vol Views feed or our network feed. And maybe we'll tweet out again during the show links to those as well, so you can listen to those later on. A lot of good stuff to debate and discuss. And we'll get to more of that in a little bit. Of course, you can always find us as well via the app stores, iOS, Android, and the beloved Fire OS. And however you listen, live streaming, downloading after the fact on iTunes, streaming via our app, however you get it, streaming via the website, however you get it, make sure you hit us up with those questions, those comments. Some of you guys really have hit us up with some crazy, epic questions. So we love it. Keep those coming. We love to hear from you guys. And joining me on the old program today, let's go in order of distance. Let's start off in the realm, the mecca of all things volatility, a.k.a. Oklahoma, where we are joined by Mr. Corner Office himself, Mr. Russell Rhodes. Russell, how's your voice holding up after this epic volatility week?
It's been an epic week all around for me. I did what I did on election night, and then I actually went to Milwaukee and was part of a big program up there talking about volatility. The day after the election, I had agreed to it like 9 months in advance and didn't realize that it just didn't occur to me that it was the day after Election Day. And then we actually, for the first time ever, did a webcast that they're going to put out there on demand shortly, where we actually talked about something very current. We worked with compliance, got a bunch of things through, and were able to review the election yesterday. And then today, as you mentioned, I am in the mecca of volatility, Oklahoma, and I'm at school, so at least I don't have to talk. I can just listen, except when I'm talking to you guys.
Isn't Oklahoma also the birthplace of VIX and OEX and SPX? Just much every product known to man, they all came from Oklahoma, right?
They didn't cover it. They came from Nashville.
That was cool. I was giving you a hard time. I was setting you up to give some love there to your adopted home state, but you dropped the ball, sir. Instead, we shall turn our attention closer to home. I'm not sure where he is, if he's in the Typhon Capital HQ, if he's out in the satellite offices of Carmen Line. We shall find out now. We are joined by the greasy meatball himself, Mr. Mark Sebastian. Mark, welcome back to Vol Views. What an epic week it has been.
Yeah, crazy, right?
It's like you elected a president or something.
I've never seen futures go limit down and then the market end up on the day. That was the nuttiest thing I've ever seen. I mean, I've never seen that type of price action, any crazier price action than that.
Certainly does hit the crazy tag. So I think with all of us assembled, we're touching on it already. So let's just dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. Like the man said, this is the portion of the show where we break down the week that was and indeed still is here from a volatility perspective. And as Mark and Russell alluded to, what a week it has been. It's kind of hard to sum it up in words, yet nonetheless we shall try. That is our job here on the old program. I think we tweeted out a few weeks ago in one of our polls, we said, is it going to be a Trumpocalypse or a Clintastrophe? I think maybe you can say these days that both terms maybe apply to the election. Certainly for Clinton supporters, it was a Clintastrophe. She didn't really carry the ball. Certainly for anti-Trump people, it was a Trumpocalypse. I'm not sure what the pro-Trump term there would be, but still, it was just a surprise. Pretty much, however you could cut it and dice it. I think for me, the moment came when I realized that things were unfolding perhaps not as every poll in the nation had predicted. Was when we were doing actually the live show, Russell. I think it might have been the second one. I forgot. And in the middle of the show, I think you mentioned you thought you saw one of the networks had called Ohio for Trump. And I kind of just paused. I said, oh, that doesn't seem right. And then when I went and looked myself after the show, sure enough, they had. And he had indeed won it, as well as many other states on the election. And that was when I noticed and realized, well, maybe all these polls we've been hearing about, all this data we've been hearing about ad nauseum for the better part of a year, has all been completely worthless. So what a week it has been. Of course, that led to just a frenzy of overnight trading, as a lot of people were clearly surprised by this. S&P were down about limit. They are down about 100 handles. And so at one point, the Dow futures were pushing around 1,000 handles off. So just epic sell-offs. Nikkei was off a ridiculous amount in the overnight period. And then you're right, Mark, it kind of just rebounded the next day once it seemed like it really hinged on Trump's conciliatory speech. And just that seemed to, I guess, set the tone for these several consecutive days of rallies we've had today, notwithstanding. We are streaming this live and recording it here on Friday, November 11th, for all of you playing along after the fact. And we are a little bit of a pause on the nonstop rally party that it has been post-election. Most of the major indices off slightly on the day. Nothing big, certainly not erasing any of the gains we had over the last few days. And VIX cash hovering right around the 15 handle as we kick off the show here. I know, Russell, you spent a whole week pretty much talking about this, including with us a couple of times here already. You even wrote a big write-up on the SIBO website detailing all of that drama, some cool charts. We'll try to include those in the show notes for you as well, listeners. Some cool charts showing the limit down and other moments in the S&P futures, the movements in the VIX futures. Break down some of that data you're watching. Also, an interesting record you guys set overnight for the extended hours. So a lot of data to parse there. What's your key takeaway from this that night and the crazy week we've seen so far?
Well, The thing that I did in Milwaukee, it was basically on market indicators, and I was supposed to talk about VIX being a market indicator. And needless to say, the overnight stuff gave me some. I actually altered my presentation on the train up to Milwaukee because the Tuesday night to Wednesday morning action gave me something new to talk about. But the other person that I spoke with was Phil Roth, who. If you're not familiar with him, he helped start the Market Technicians Association. He actually, and this is amazing to me, his career started a year before I was born. He's been around for just over 50 years. And he said that what you basically experienced because of 24-hour trading was panic and then the relief associated with the Trump victory, that it all occurred in almost a 12-hour period. And that's the chart that you mentioned that you should throw. I think you are going to throw in the show notes. Shows that, and it's really interesting. We had, as you and I spoke twice, as the VIX kept working its way higher, and every piece of new news that came out seemed to favor Trump. There never seemed to be a moment where the Clinton camp heard anything good. Other than maybe a couple of key states not being called yet. So you just kept seeing this backing and filling, almost parabolic type move out of VIX. Then just what you mentioned when you and I were doing the second podcast and Ohio got called for Trump, that's almost about the same time that VIX peaked out. I think that was the sudden, the final, let's just call it a panic move, because there was a lot of panic until he spoke about what is this going to mean for the whole world. And then after that, the S&Ps they trended down just a little bit. They hit limit down for about 20 minutes or so. And just before they came off the limit, VIX started, the VIX, and when I say VIX, I mean the November VIX futures, because spot VIX wasn't being quoted then. The November VIX futures started on a pretty hard downtrend, and I actually think they did a really good job of being a leading indicator as to what the S&P 500 was going to do, and then did the next day as well.
And listeners, if you're looking for that chart right now, we just tweeted it out. So if you're following us at Options on Twitter or on StockTwits, you can get at it there and see exactly the chart we're talking about, and that the peak in the VIX futures and the trough in S&P futures comes not that far after that Ohio declaration. So it does seem like that was maybe the breaking point, the turning point for the market, where they realized, wow, this is really happening. And that was perhaps the beginning of the end also for a lot of the Clinton proponents out there. So interesting stuff. Check out that chart. We'll of course have it in the show notes for you guys to enjoy after the fact as well. Mark, I know it was probably a crazy night for you as well, watching it from a lot of different angles, just watching it from a pure American political perspective, watching it as, of course, managing some money over there at Carmen Line. We were talking when you came on with us and the first of our live hits from that day. You were saying how people were aggressively fading the VIX. Everything being quoted out there was VIX puts, VIX puts. It was just VIX 1x2 puts, you name it, everything to pretty much fade this event. And they were playing it like a typical event risk, like an earnings, which a lot of people thought it usually would play out that way. You get a little bit of a froth, and then the bubble bursts, and downside is where the action is from a vol perspective. And it seemed like in the initial fury, at least, when all this craziness was happening, that was the exact wrong way to play it. That was just, it was going to be a crazy night. We weren't going to know who the president was. Maybe there was going to be challenges, recounts. It could drag out for days or even weeks, setting us up for a prolonged period of near-term volatility. Of course, none of that came to pass, and it turns out the patient folks out there who did indeed fade this vol and were able to kind of grit their teeth and bear it through the overnight session ended up doing all right. So walk us through your thoughts on this, your viewpoint on that, and what you were thinking when all this was going to hell in a handbasket overnight.
I mean, when we were down 70 or 80 handles, I said I would buy this market. This is stupid. And it was. There was no reason for that kind of sell-off. And we quickly recovered. I mean, we were barely down on the day when we opened and rallied all day. Volatility was just exploded, and then fell back. I mean, let's talk about the VIX futures trading up over 6 handles, on top of the fact that the S&Ps were down over 105 points. And on what? And really, the sell-off started when Florida started to look like it was Trump. We were up 15, and we went from up 15 handles to down 15, and then it looked like, and then really, as Pennsylvania was happening, that's when just everything went to hell in a handbasket. And what saved the markets was 2 things. There was a result, so we had a result, and Trump made a surprisingly good victory speech, one that was conciliatory toward the losers. He congratulated the Clintons, and he's followed up. Now we've seen markets rebalance. I mean, we should talk about what happened yesterday with the NASDAQ, what's going on with the alternative vol indexes, and what's going on with the Russell 2000 right now, the Russell Rhodes 2000. But because there's definitely some seismic shifts in the market, but volatility exploded, and then those 1x2s were great winners. If you were, one of the popular one was like the 1715 and the 1513, and I think I saw the 1614. They're all about 2 wide. All of those have done extremely well out of this, as the market, as it always does, said, you know what? This is not as big of a deal as we thought it was. And that's what happened.
Russell, I know you had some additional thoughts here about how all this stuff just played out and the maelstrom, the wild ride we've been on pretty much ever since.
Well, the thing I wanted to point out, and it's kind of difficult to see on the chart that we tweeted out, we didn't make a new high in VIX when we hit limit down on the S&P futures. And I think that might have been, you would have expected, oh my God, we're limit down. How much worse is it going to get? And it didn't show up in VIX. I was very proud of VIX being a really accurate indicator during the election. So baby's all grown up.
the proud papa of VIX. It's very proud of VIX. Well, you certainly had a lot to be proud of this week. The numbers were just off the charts this week. I'll have to see. You're the man who has his fingers on all that data, Russell. But if this is not the most active week, today kind of dropping the ball a little bit. If today was over 1 million contracts, I think we might very well be the most active week in VIX history. But if it's not the most active, it's certainly up there. But we speculated even back on that second episode on Election Day that it certainly seemed like the numbers it was still early, so we didn't know, but it certainly seemed like you guys are going to set a record in the extended hour session, because that's where all the volume was going up, and that's where everything was just lighting it up, and it was panic, and Ohio had just been declared, and it was just a frenzy in the after hours. So it seemed like this would even trump Brexit. Indeed, that is what came to pass. You guys announced on Wednesday that you did set a record in those non-U.S. trading hours, the extended hours, 263,000 futures changing hands. That trumped even the Brexit frenzy, which of course occurred on European hours and was very much aimed at that marketplace. Only did about only in quotes, 235,000 contracts during that crazy period. So yeah, people were indeed lighting it up and trading in a frenzy over that overnight period. And what a crazy week. We've seen people writing it up. We talked about it obviously on the show. We just talked about it now again, but a lot of people have been writing it up as well over the week. I think Reuters, even maybe the Journal, a few others were writing about how all these short VIX strategies that everyone was quoting seemed to come to pass finally. We saw, of course, a record puts going up last week on some days. The Reuters pointing out about 769,000 VIX puts trading back on the 4th, which is obviously a bit ways before the election, but that's something we've, of course, have pointed out on the show as well over the past week or two, that puts have been back in fashion after usually puts, as you know, if listening to the show, puts not exactly the most favorable and fashionable of all things. I don't know, Russell. Maybe we'll get to it now because I'm kind of curious. Anyways, I think maybe we'll dive into your segment. And hopefully, I teed you up with enough time. If you had a chance to go back and look, is this indeed the most active week? Maybe not today. Today dropping the ball. I'll give you a little bit of a tease for what we're going to talk about in the VIX options in a little bit, listeners here. But yeah, pretty much every day this week has been over a million on Monday, Tuesday, Wednesday, and Thursday. A little bit over a million, but still over a million. If today hit that million mark, I think we definitely would have been in record territory. So far, at least about halfway through the session here, the ADV is about 564,000 and hitting about 400,000 today. So it doesn't seem like today is going to be that day that pushes us over 5 days over a million. Might be a record for that as well too, if that had happened. 5 days over a million. So let's tee it up for Russell's weekly rundown, and we'll see how much data Russell can amass here in a few seconds.
Now, Russell's weekly rundown.
All right, Mr. Rhodes, hopefully I teed you up with enough time there, but I'm curious, before we even get to the weekly stuff, is it indeed a record week, or were we just close enough and today kind of maybe the seemingly light, comparatively at least light volume today is enough to do us in? And also, if you know, has there been a week where every day has been over a million contracts?
I'm not sure if there's been a week where every day is over a million contracts, but we probably won't even be in the top 10 of weekly option volume this week. And in fact, as we speak, I'm getting ready to tweet a table of the top 10 volume. We'd need to do a little over a million today, or I think we'd need to do a little over 900,000 a day to get into the top 10. The most active week ever for VIX options is back in February of 2014, and we did 7 million contracts. Which I didn't. For full disclosure, I knew ahead of time this was coming up, so I had about 20 minutes to run the numbers, and I was curious as well if because a million each day of the week, that's pretty strong for VIX options. I think we're averaging 700,000 this year per day.
Yeah, it's been about 600,000.
A million every day. So that and as you mentioned, that overnight volume on a couple of different metrics, we did records. I think the reason we broke the Brexit record was the activity started earlier, or the increased volatility started earlier. You know, it was like 10 or 11 o'clock when VIX really started moving. 10 or 11 o'clock Chicago time when VIX really started moving on Brexit, whereas VIX started moving a lot earlier. I mean, literally, they closed the polls at 7 and started talking about them, and VIX just starts rocking off to the upside. So I think that activity is what caused us to do record overnight volume relative to Brexit. You know, if we didn't start getting results till midnight, that might have been a completely different story. But I was taken aback by the volume that as strong as things have been this week, it's nowhere near a record.
Yeah, that is pretty impressive, because when I saw we were closing in on 5 days potentially over a million, I knew that in and of itself would probably be a record, even if the total volume perhaps wasn't. And of course, today looks like it's coming up short, so that we didn't hit that anyway. But still, it had all the hallmarks of some sort of record territory in there, and I guess we're coming up a little bit short. That shows you how tumultuous some of these other periods have been, where even this roller coaster. It also shows you how kind of light overall VIX options volume has been for the better part of this year. We've been hovering on that 600,000 contracts volume level, which is still light in and of itself. So when we consistently break it for a while, you know, everyone, ourselves included, get a little bit excited, like, hey, something's happening here, which is interesting. That said, there's a lot of volume to parse here, Mr. Rhodes. I don't envy you your task, but that said, aside from the aggressive fading going into the election and maybe the unwinding coming out of that, anything else, any other trends or interesting developments catching your eye out here in VIX weekly options this week?
Well, the VIX weeklies, and we warned multiple times and multiple venues that if you were going to trade the November 9th, you had to keep in mind that you didn't have a chance to trade them after the market closed on Tuesday afternoon. So the result really was probably the lightest and the lowest open interest and trading volume that we've seen as far as the weekly contracts go, just because, you don't have to trade, and something that's got the overnight risk that those options had probably was not worth getting involved in. In fact, I had a couple of people shoot me questions and ask, why isn't anything going on in the November 9th options? And my response was, why, the risk is just the uncertainty is just too much for somebody that might want to have done a trade on Tuesday, regardless of what their view would have been. And then if you think about where VIX closed and where and then where it opened or where they settled the November 9th, relative to all the news that happened between those two events, it's not, it was just something that I think the smart money decided to avoid. If anybody had asked me about getting involved in those, my job's to help educate and promote CBOE products, but I always want to do it do it properly, and I would have told you to stay away from them. So that's my silly weekly rundown. Was nothing like it, which is exactly what I think people should have done with that expiration.
Yeah, on the surface, it seems tailor-made for an event like this. And maybe in some other quieter events, it could have been. But you're right, the tumult there, and just in the after-hours period alone, I think would have scared off even the strongest of constitutions. Mark, anything catching your eye out there from an overall VIX options trend or volume perspective before we dive into some of the hot strikes that are on the board for this week?
No, just like we continue to see lots and lots of put activity. I think the idea, I think now that people are starting to kind of really get how VIX works, some of the reversion, I think we're going to start seeing volatility no longer only played from the call side of the trade, from calls. I think you're permanently going to see puts involved in the decision-making process.
That certainly seems to have been the case this week. In fact, if there's a narrative you can use to sum up this week's activity, maybe a nice general trend, you could probably use, let's say, put palooza, because that's pretty much what it was. Even with a bunch of puts and open interest coming off the board, of course, with the Wednesdays, we still saw a remarkable shift here in the hot strikes for this week, the top 10 strikes that were, of course, of open interest perspective overall from this past week. And last week, remember, we talked about, I think there's only one put on the list, and that was about it. Well, that worm turned aggressively this week. We actually have 4 on the top 10 this week, so very interesting change of pace. Starting off, number 1, the NOV 21s, right in the middle of the action there, that 21 level. So not surprising that one with 313,000 would be number 1 with a bullet this week. But then number 2 right behind it, a fair way off, but still number 2 would be about 196,000 of the NOV 16 puts. So puts, number 2, haven't seen a put number 2 on the list in quite some time. Again, maybe going back to Mark's point that maybe puts are back in fashion out here in VIX land. Number 3, also a put, 192,000 of the NOV 15 puts. So number 2 and 3 back-to-back puts with similar volume. Can't really remember having seen that in quite some time. Number 4, the NOV 25 calls. Again, this is mostly NOV on the list as well. Not surprising this week, given where all the action was. 184,000 of those open. Number 5, the NOV 14 puts back on the put side. 176,000 of those, followed closely by the NOV 14 half puts, with 173,000 of those bad boys open. So pretty much put palooza there. Of the top 5, 3 of them being puts, and the top 6, 4. Number 7, I should say. You can't get away from the 30 strike, and yet again, that is in the top 10 this week. The NOV 30s, about 170,000 of those open. 167,000 of the NOV 24s for number 8. And then some more call upside. NOV 26s for 165,000, and way down there at the bottom, number 10, that 30 strike, you can't get away from it. It's the first Dece on the list as well. The Dece 30s, that strike, that line, that just keeps people are fascinated by it. They won't go away from it. Back when the VIX was, hovering down in the low teens, they were still trading 30s. Now that it's been vacillating around in the high teens into the 20s, the 30s are even back more in fashion. So number 10, the Dece 30s, 163,000 total, about a little over 7 million contracts open, about 4.6 on the calls, and about 2.4 and change on the puts. Got some earnings going off this week. Anything else you guys want to toss in there on the broad volatility space? I know, Mark, you had a few thoughts on Russell Vol and all things there. So why don't we get into that a little bit, maybe share some of your thoughts there before we get into some of the individual equities that we're lighting it up for this week.
I mean, let's look at what's going on with the Russell 2000 over the last couple of days. It's up another 2% today. Yesterday it was up huge with the NASDAQ getting pummeled. And, let me read through this for you. The Dow Jones is flat. It's up 0.09%. The S&P is down 0.18%. The NASDAQ is down 0.1%. The Russell 2000 is up 2%. And, I was talking to a trader, and what he was basically saying is that it's a rolling of change in policy. The Russell 2000 is our Russell Rhodes 2000 will tell you, is primarily U.S. based. It's U.S. companies. It's U.S. income. And they potentially, I guess the market perceives the companies in the Russell 2000 to be in a position to really succeed with some of the policies out of the Trump administration. Meanwhile, the so-called enemies of Trump, Amazon, Google, and Facebook, whose owners, or CEOs kind of openly rooted against Trump, they've been getting thwacked. There was a mini flash crash in Amazon yesterday. At one point it was down 8 or 9% before it settled down. And despite the fact that I think in some names like Apple or Microsoft, where they have a lot of cash internationally, some of those names were getting thwacked as well. And so when you look at the different vol indexes, VXN, which is the NASDAQ VIX, is 1950. RVX, the Russell VIX, is 1960. Meanwhile, the cash index VIX, 14.9. I think it shows you where kind of the broad market stuff probably isn't going to do that much. But there is a serious realignment of where sector growth may come from, at least perceived by the market right now. And that's why we're seeing those different volatilities move the way they're moving.
If there's no other better indicator, I should say, that something is afoot with the Russell, is that our old friends there at Russell with their RVX lighten it up this week, actually. This is a product that has notoriously struggled to get any volume or open interest, and doing a couple big chunks. There's actually about 1,000 contracts open out there right now, which is anywhere from about, if you follow the RVX, for those of you out there who do, like us, it's anywhere from about 2 to 3 times what the average open interest is out there, if not more. And a lot of that came this week. Of that 1,000 contracts or so, let's get the exact number for you. It is 1,076. Of that 1,076, about 800 came in the last week or so, with about 500 coming up on the 3rd, so coming into the election, and about 300 on the 8th, so on election day as well. Surprisingly, no trading after the election out there in RVX. I think people might have been unwinding out there, but you're right. It has been a long, strange trip out there in all things Russell vol. Russell, it must be really confusing for you to talk about Russell, because I get confused just tossing to you about it. So it must be even harder for you to talk about it.
Yeah, it's funny when we have meetings, because they're one of our best partners, guys over at FTSE Russell, because we have been the primary place to trade RUT options, and pretty soon the only place that you're going to trade any Russell-oriented index futures is going to be CME Group, because the Russell 2000 futures are moving back there this summer. So we've been working with the CME Group as well to bring more attention and love to the small cap index. And when we have meetings around CBOE, we often refer to the Russell 2000 as RUT and me as Russell to avoid the confusion. Yes, I always thought that I would be confused with a benchmark index. Just another thing I did want to point out about the Russell 2000, and this one, again, was something that Phil Roth threw out there in the presentation I did with him on Wednesday. The Russell 2000 has a much larger weighting in financials than the S&P 500 or any of the other broad-based, especially the NASDAQ, because I don't think there are financials in the NASDAQ. And that was the strongest performing sector after the election results. When you look at those different sector funds, the XL, whatever they are, and I think that's part of what we're seeing with respect to the Russell 2000 outperformance. I think it's a combination of what Mark Sebastian was saying, where the RUT is much more of a domestic index. It's something I've been hammering home for years now, but I hadn't really thought much about the financial component until I heard a much wiser person talk about it this week.
Well, thank you for that, sir. I appreciate that honor. As we turn to the single name equities that we're reporting this week here. Easy for me to say while I'm typing and doing other things. There we go. All right, yeah, a lot of things going off out here this week from an individual equity perspective. Sometimes it's nice when we look at all these crazy turbulent events like macro events like an election. Sometimes it's kind of hard to really wrap the heads around all the different moving parts there. Sometimes it's nice to just look at a nice, simple earnings event and say, okay, let's sink our teeth into that. And there were still a few, despite the maelstrom of other activity this week, there were a few names popping off this week, including some big ones. Let's start with Disney. They came out yesterday, I believe. Yes, they were closing right around a little bit, at about set 96 or so, and they were pricing in a little bit less than $3, about $2.70 on that straddle. Works out to about 3%. And so far today, they had a bit of move in the after hours, and today they're up about 2.5%, about 235. So right about in line or pretty close to it there out there in their straddle. They got as high actually as 98.32, so they were actually outperforming there for a while before, I guess, all the general malaise of what's going on in the marketplace overtook them and brought them down, brought them low a little bit. Someone who's not going low, though, who's just blowing the doors off of it is Nvidia, ticker symbol NVDA, of course. They closed around $68 yesterday. They were pricing in about a $5.40 straddle, so about 8%. Did they outperform? Oh, did they? They're today up nearly 20 handles today, hovering right around the 87 mark right now, up about a little over, about 28%. So apparently things are good in the video card realm. I guess gaming is going well. The consoles are selling well. People in the trading space are using a lot of graphics cards. Mobile space, apparently that's the place to be. So Nvidia lighting it up. Who'd have thunk? Nvidia may be the name coming out of the earnings cycle here as well, and a lot of the other big names have kind of been a bit of a snooze. And then here Nordstrom, the other bigger name, reporting yesterday, they went out about $57 and some change. They were pricing in a little bit less than $5, so a little over 8% on their straddle. And so far today, about $2.18, or a little bit about 4% here on the old straddles. I know, Russell, you like to watch a lot of individual earnings names. Anything catching your eye out there this week, even though it has been kind of a VIX palooza? So you'd be forgiven if your entire focus this week has been VIX.
No, you caught me typing myself. I was getting ready to tweet out that you were talking about Nvidia, and the biggest 3-year jump in the stock off of earnings has been a little over 15%. So this is most definitely an overshoot. We finally, it seems like this earnings season, we finally had 2 or 3 names that have done what you just discussed Nvidia is doing. And it had been a couple of cycles since we've seen that. So you're starting to see, I'm trying to think of a way, making earnings great again. Maybe we can make some hats up like that. And because Nvidia definitely did that. Next week is retail week. We've got Lowe's, Home Depot, Best Buy, Gap, Walmart, and I think maybe even Target. And it'll be really interesting to see if they're a little bit more. Everybody thinks that now that we got a different presidential outcome than we expected, that you're gonna, expect that there's going to be a lot of uncertainty. I guess we're not going to buy our kids Christmas presents this year until we see what Trump's going to do. But it will be interesting to see what the tone is about the upcoming Christmas season from the retailers, and if they're going to try to set the bar low or what when they're allowed to talk next week.
Indeed. I hear you typing frenzied there, Mr. Sebastian. I know you watch some earnings, even though maybe this week was your attention was taken elsewhere. Any earnings? I think Andrew has mentioned in the past your pit folk really like Nvidia. Anything lighting it up out there from Nvidia on your front?
There were definitely some people talking about it. I was a little tied up with everything going on in the market, but we definitely had that. That was a popular one. So it was pretty. Absolutely, we were.
That's what you get for working all those put 1x2s while all these earnings are popping off. How dare you, sir? All right, let's keep on rolling. It's time for you guys to join us here on the old program and dive into our volatility voicemail. Easy for me to remember.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. So many segments on this show. It's easy to get all the names misplaced. This is, of course, the portion of the program where you guys get to join us with your questions, your comments, your insights. I just want to point out to you guys really quickly before we detail this week's question of the week. Last week we asked you guys, what are these unlikely scenarios? Which one is the most likely? And we asked you, is VIX going to pop over 20? Facebook beat their at-the-money straddle? Donald Trump win the election? Or the Cubs win the World Series? Who would have thunk it that about a little over a week later, all four of those unlikely things have come to pass? Let that just marinate. Let that just sink in for a second. If I had asked you someone to pick the not even the trifecta, the quadfecta out there, picking all four of those, no one would have taken that. That would have been madness. I think the Cubs leg and the Trump legs being the outliers there. And still, all four of those came to pass. So I guess our question of the week last week was either prescient or indeed foolish, because all four of those things were obviously a lot more likely than anyone, I think, thought. This week's question of the week, a little bit different. We asked you on Monday. This is only through Wednesday now, obviously, because it was an election question. We asked you the SPX Weds Weekly straddle that was pricing in about a 2% move. We asked you this right around the end of the day on Monday. So that's kind of where the level we were looking at, where the S&P, if I'll pull up the exact level for where it was, but it was right about, closed right around 21.31, so right around that 21.30 range. We asked you guys, hey, what are you expecting to see over the next, how much will it actually move through Wednesday the 9th? We asked you, is it going to be less than a 1%, so kind of a move, or between 1% and 2%, which would be a rock and roll move, or 2 to 3%, which we termed a big move, or over 3%, which is indeed a crazy move. And it turns out the wise among you chose over 3%, a crazy move. Now, this we can parse in a lot of different ways. 36% choosing that, by the way. Net, I don't think we actually got that total of about 3%. I guess it depends where your frame of reference is. But of course, if you factor in the craziness of the after hours, then indeed we did get 3% and more. So I'm inclined to let those people who voted for that be the winners, because if you were savvy out there, if you were scalping gamma or futures, you had a more than 3% move to play with, and so you were probably a pretty happy camper coming out of all this. So yeah, what a crazy couple of weeks it has been for questions and how everything changes the moment after we put out these questions. I wonder what we'll tweet about next week and how the world will change, perhaps as a result. Let's see. Oh, we got some good questions coming in this week. This one comes from Brian Asmal. He writes, "Hi, Mark. Your shows are the best known to me. Congratulations on your success." Well, thank you, Brian. He goes on to write, "I have a topic/question for Volatility Views. I'm trying to get a sense of how viable XIV will be in the long term." Interesting. Are there red flags for ETFs, ETNs, that would indicate whether or not they will go broke at some point? Are the bigger ETFs/ETNs a safer bet, or is it the ETFs, ETNs that deal with futures contracts the ones that end up in trouble? I appreciate and value your advice." Brian, well, thank you for your kind words there, Brian. Interesting question. We kind of have hit on this in the past in different areas. Of course, if you're not familiar, XIV listeners, of course, the daily inverse short ETN out there for VIX, one of the more widely followed and traded ones out there. Of course, I think the obvious example everyone holds up in these types of scenarios is, of course, TVIX, which very infamously, and we of course just wildly mocked it on this show and maligned it. It kind of just fell apart at the seams. It had influx of funds. It wasn't set up that well to begin with. And that's one of those ones where if you dug into the prospectus at the time, you can kind of maybe see the wheels coming off the train there, coming off the car. And it, of course, imploded. Of course, TVIX now still trading, still exists. People have very short memories here in the world of VIX ETPs. That's a 2x. That's a double short-term ETN. And that to me is kind of the barometer where I start looking even closer at the prospectus for a lot of these things. When they try to give you some sort of leverage return, that's for me is kind of a diehard old school options guy. I get a little bit nervous as how they're trying to replicate that. So that's probably my first array of flags, even before I look at how they're doing the underlying, the futures, or anything else. If they're trying to claim to deliver me some sort of leverage return, I want to know exactly how they're doing that, because I know how challenging that could be to deliver that on a regular basis. And if you're jumping through some weird hoops, that's probably where my first red flag is. Let's start, Mark. I know you had a lot to say back when TVIX melted down. You're still not a big fan of it. What do you have to say here for Brian? He wants to know, what are some red flags for these products, whether or not they're going to go broke? And for you, does it start with ones that trade off the futures, or is it something else that causes your ire, your dander to go up?
I think the red flags are just be aware of the structure, be aware of how these things work. Spend some time on the prospectus. If you read the prospectus, you can kind of figure out what the red flags are. A lot of them have, especially the short ETNs have, if they lose an X amount of value, they go out. And then with names like TVIX and stuff like that, you got to look at the term structure and just be aware of how those are built. And then kind of you have to be especially careful with things that are like that have kind of a daily and are levered. That should always raise red flags. Anything that says levered should be raising flags. So.
Yeah, that's my first. That's where my red flags instantly go up, like I said before, and then I kind of dig in from there. But you're right, the rebalancing is also should be a factor. If it's going to be daily, then all the issues we've laid out with things like VXX. Obviously, it depends on what they're trying to replicate. But if they're kind of rebalance daily and they're trying to do some sort of long or replicating vol product in the future, there's a challenge there as well. We've outlined that many, many times on this program. Russell, I know you're not as down on TVIX as maybe Mark and I are. So what are your thoughts here on some red flags for things that get you nervous in the VIX ETP realm?
Well, a couple things. First off, you were talking about the 4 predictions. I've got another prediction. I'm going to predict a headline from June 28th of 2017. You ready? World champion Chicago Cubs visit President Trump at the White House.
Probably.
That's when the Cubs will be in Washington playing the Nationals. That's the one that really gets you when you start thinking about it.
So Obama doesn't even get a chance to see the Cubs. That's a shame. That you think? I know he's a Sox.
Hey,
he's a Sox guy.
He's a good guy. He's a Sox fan.
He's a Sox guy, but
totally
I think he'll feel the Chicago love.
He did not bandwagon on this thing, so good for him. He really didn't. I almost punched my Hertz guy here in Oklahoma who said "Go Cubbies" as I walked up last night.
My little guy is a Sox fan, but he got lured into the Cubs maelstrom. It was kind of hard to avoid. It took over the city.
I'm gonna bring him a care package of White Sox stuff. I've got some stuff at home that doesn't fit anybody anymore, and it's all his.
There we go.
What were we talking about? Oh, the ETPs. The thing is, if you had bought TVIX or UVXY or even VXX on the close before the election, I know that they closed down, but not too much. VXX was only down 2% on Wednesday when VIX was down 23%, and they were all much higher in the pre-market before the equity market opened. They are great instruments to try to pinpoint spikes in volatility. I'm always going to defend those guys. I don't know the assets under management for XIV versus SPXY. I know the reason that I favor SPXY, which does the same thing as XIV, is because it doesn't have an internal call feature, so there are options available, and I like to be able to trade options around those funds as well. But those funds have a use. I mean, VXX has been down. It's down 99.6%. The darn thing has $1.5 billion under management. Yeah, you just can't. Somebody's found a way to use it, and it's not all short. So, they're useful tools, and I protect them just like I protect VIX. They're all our babies.
You're very paternal over there.
I'm being very paternal today.
A lot of people out there do like to use like the AUM of the assets under management or asset, balance these ETPs have as well. And certainly there maybe is a little bit to that. And, obviously the larger ones have managed to attract some sort of significant critical mass behind them. So that should somewhat help. Of course, in the issue of a TVEX, it was actually, it was a problem with the product, but also an influx of cash that tended to knock the wheels off there. So that's not always the best barometer. But if something is deep and liquid, you at least have a somewhat of a reasonable expectation that it should be around tomorrow. 2 months from now, I don't know. But in the short term, you'll probably be better off with a larger, deeper, more liquid product than some of these more esoteric ones that are trying to find their purchase in the volatility realm and maybe are wider and less liquid as a result. Really, since we're talking VIX ETPs, we got Mike the Bookie. He says, the ETF-based volatility indices. Is here a good place to bracket UVXY and or VXX? Of course, VXX is everyone's favorite, much maligned VIX ETP product. UVXY, of course, is the short-term futures ETF. Bracket is kind of a bit of a loaded term. It can mean a bunch of different things to a bunch of different people. On the technical side, it means one thing, and on the usually on the underlying, it means something to do with the underlying and working stop orders above and below, maybe one standard deviation or so, depending on where you work those orders is kind of how you bracket. In the options world, it could be selling a strangle on it or even doing a risk reversal around it. So there's a couple of different ways that you could maybe interpret this question. I'm assuming, that's how I said, it's kind of an open question. I don't know. I mean, I think a lot of technical guys use bracketing as like they own the underlying, so they own UVXY, and then they would work stops about one standard deviation or so out. So that's kind of what they mean by bracket. It's kind of like a poor man's collar in the options world. Whereas in the options world, it could be a collar. It could even be, some people think of it as like a strangle, selling a strangle around an underlying so you get out or you get some more, in this case, on the downside. So there's a lot of different ways you can interpret it. Maybe let's think of it more let's think of it as a strangle in the strangle terms. Would you be selling strangles or indeed buying strangles around UVXY or VXX in this environment here, Mr. Rhodes?
I would have thought, and I would have been dead wrong, but I would have thought buying a strangle on one of those double guys would have made a little bit of sense in front of the election. The day before, thinking that we're going to get a big move one way or another. Of course, when all was said and done, UVXY and TVIX were only down 5% the day after the election, which for a lot of things, that's a big move, but that's just kind of a normal day for those guys. I think the better way there's two ways to use them, and 9 times out of 10, the way to use those funds is to get short exposure to the volatility, either by taking the other side of moves in those leveraged funds, which do drift down over time, or taking a look at buying XIV or SPXY whenever we get any sort of volatility spike that pushes those guys down. SPXY at one point this year was down almost 50%. Now it's up 80% on the year, which means it's more than doubled off of its bottom. And I for those people, and there are pros and cons to this type of trading, but for those people that like to, take the other side of moves and you can get fingers cut off doing that, SPXY is a good way to take the other side of a volatility spike. Sometimes it takes a long time, but usually we do see new highs in SPXY after some sort of volatility event.
All right, that's all the time we got for the volatility voicemail. Keep those questions coming. You guys hit us up with some great epic. Some of them we can't even fit on the show notes. They're so big, but they're good. Keep them coming. Meanwhile, we got to keep on rolling into our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. Like the man said, this is the portion of the show where we all prognosticate recklessly and indeed wildly at where the future holds from a volatility perspective. Last week, we were kind of all over the place, but vol was very elevated last week, and we were kind of predicting Russell predictably predicting more upside from a vol perspective. And intra-week, he came pretty close, particularly on election night. He was picking 23.5. I don't think we got that high on election night, but we got pretty close. I was more in the 18.5, so kind of a little bit elevated, but not much category. And then the ghost of Mr. Greasy Meatball, who he may actually be picking here again, we'll see, was way on the downside, 10.80. So none of us really knocking it out of the park. I guess net movement-wise, I was a little over 3.5, about 3.5 handles away. So I guess that makes me the dubious winner amongst the three of us. So I have the choice of picking or going first. I like to go first because otherwise, if I let you guys go first, one of you guys is going to come around my range, and I have to adjust. And that's no fun. So I'm going to go first. Let you guys adjust around me for a change. And I could go the easy, boring way of looking at what the VIX futures are pricing in. They're pricing in a little bit of an elevation. Right now, we're hovering right a little bit shy of 15 in the VIX cash. The front month future is about 15.5, and they get a little bit higher from there as you go out. So they're pricing a little bit of extra juice coming in. I'm not sure if I'm feeling that, but I'm not feeling a very aggressive sell-off here either. So I'm kind of liking actually kind of where we are right now. So I'm going to hover around the 15 handle again for next week because I'm not feeling a lot of juice in either direction right now. I think we're kind of in a weird, uncertain period, and I don't see a lot of explosions to the upside. I don't see, well, unless you never know with Trump, but you never also, I don't see vol coming off too aggressively either. But again, you never know with these times, so we shall see. Let's try the ghost of Mr. Sebastian. Are you there, sir? Mr. Greasy Meatball, are you there?
Yeah, hey, what's up?
There he is. All right. I thought we were going to make your ghost pick. I'll let you go second. What are you feeling for Crystal Ball next week?
12.
Oh, so you are feeling the sell-off. Interesting.
I am.
Interesting.
Wow.
I got a feeling you and your put 1x2s would be feeling a little bit of downside. I didn't know it'd be that much, but I figured you'd be somewhere down there. Mr. Rhodes, you've been the degenerate vol buyer amongst us for the better part of the past year. Is that trend going to continue this week?
Did you call me a degenerate?
Degenerate vol buyer. So there you go.
Did you call me I haven't been called a degenerate in like 6 years.
Oh, you haven't been on the network long enough. I call everybody degenerate over time. It happens.
Okay. You know what? I'm actually I'm going to have confidence in our president-elect. I think that the tone that he's trying to set is going to continue to be conciliatory, but I don't think VIX is going to go as low as Mark Sebastian because we are going to start creeping up on December, December options having more to do with VIX, and we got that rate hike. We're facing that most likely in the middle of December. So I'm going to say like I'm going to split the difference between you guys and say 13.5.
Ah, one of your few sell-offs or sales, I should say, of volatility from Mr. Rose. Take that for what it's worth, listeners. This man has been buying vol all year long. So if he's selling, that in and of itself may be worthy of note. Unfortunately, that music means we've come to the end of yet another epic sojourn through the world of all things volatility. We started off, of course, with the Trumpocalypse, Clintastrophe, call it what you will, just rocking and rolling the whole week. We got into all the different myriad adjustments and movements and put-paloozas going on in the options, even a little bit of movement out there in RVX and all things Russell. Some earnings as well. Yes, there were a few earnings popping off this week. A bunch of your questions about ETPs. All you guys have ETPs on the brains. Keep those coming. And then we round it off with all of us collectively making fools of ourselves for yet another week. Isn't that fun? All right, but before we go, let me check back in with my cohorts, my partners in crime, see what they have cooking that may interest you. Let's start with the greasiest of meatballs. I know you guys had a volatility webinar over I think a week or two ago that was pretty well received. What else is cooking in the land of the pit? This would be where you respond with what's happening. I was like, I will respond for the ghost.
Get myself. Sorry.
Oh, there he is. There he is.
Just make sure you're reading my blog every day. Optionpit.com/blog.
There you go. Tell them where they can find it. That always helps. Optionpit.com/blog. You can read all of Mark's pontificating on volatility. A few typos mixed in there as well for good measure. All sorts of fun. Check it out. I know we read it all the time over here as well. And last but not least, Mr. Corner Office. Once you get out of the volatility mecca of Oklahoma, what's cooking in your realm? And also, when can we see these cool new bells and whistles from our friends over there at LiveVol? I know we're all dying to see them.
I still haven't heard anything from the guys at LiveVol, but as far as what we've got going on, and I've got a professor waving at me and telling me to get into class. We've got a one-day index class coming on the 18th. Right now, we actually have the first ever CBOE, Financial Management Association, Volatility and Derivatives Conference going on, where some high-end academic papers are being presented. I think we're going to be able to put those presentations up on our website and share them for the more egg-headed minded people that listen here. And then I am off to Singapore, Hong Kong, and Shanghai from the 18th until December 5th. But of course, I'll be getting up in the middle of the night and talking to you guys.
What's better? You did it last year too, beaming in from Hong Kong, getting the Asian flavor on all things volatility. We look forward to that. And I'll go off to class, sir. Don't want you to get in trouble. Tell him we ate your homework. Maybe he'll buy that for you. Meanwhile, on behalf of Russell and Mark, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, sending in such great and epic questions. Keep them coming. And of course, for joining us live as well. We love you guys too. And we'll see you next week right here on Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.